Hello everyone, welcome back to Upside Down Data. Today I want to talk about Algorand and some indicators we can look at to try to understand its current price action and where it might be heading next. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So to start off, I want to consult our upside downside potential indicator. This is a machine learning based model we have here at the channel that's designed to assess risk. So essentially higher scores on the UDPI are higher risk, lower scores, lower risk. And you see it does a good job of identifying these high risk points that precede these moves to the downside, as well as these low risk periods, which have historically been good accumulation zones. And one of the things you'll notice is that we've entered into pretty deep green territory with this fall off all the way down from the all-time high, revisiting price levels we haven't seen since the summer of 2021. And so this is suggesting that from a historical perspective, these are the kind of levels that when we've seen them in the past have pre-staged some nice moves to the upside. Now, of course, what Algorand does from here is going to be probably tethered to what the broader markets are able to do. But if we do see equities continue to move up, and if we see Bitcoin be able to break off of some of its resistance and move back up into maybe 50K or so, then Algorand could be coiling up for a nice pop back to the upside. Now, not to say it would absolutely clear past these ranges, and I want to talk about some on-chain data in a minute that'll give us some target prices of where we might want to look at to expect resistance as we start climbing back up here, should we rally. But certainly the upside potential is there, and we've exhausted quite a bit of the realistic downside potential from the model's perspective. And so really, I think that if broader markets allow, this could potentially be offering a nice setup. Not financial advice, of course. So that's what the upside downside potential indicator is saying. And this is the long-term version. Here's about more macro moves that play out over months to years. Another model I want to consult is our trend confidence indicators. This is another machine learning based algorithm algorithmic model that we have here on the channel. And this is not a risk indicator. This is designed to assess basically how confident we can be in the current trend. So the idea is that 0 is kind of this key level, and when we're above 0, that's bullish. When we're below, that's bearish. And the idea is that if we're in an uptrend and the TCI is green, that's good. That means that we can have maintained confidence that that uptrend will continue. But then if you have an uptrend and the TCI is red, like what happened here, that's a bad sign. That suggests that this uptrend is not very believable, and that downside could very well follow. And that's exactly what we saw here back in the spring of 2021. But then again, you're in a downtrend and the TCI flips green, that's a good sign. That suggests that this downtrend might be coming towards an end. And indeed, we then popped off right here, popped up, had that huge run to the all-time high, and the TCI called that trend right at the beginning. Right as it was happening, it said, start paying attention, had a slight dip into the red, and then off to the races we went, right here, right at the beginning of that uptrend. But then right after that all-time high, look what it did. It plummeted right down into the red. Even during this uptrend here, it was not buying it for a second. It was not believing it. We moved down. It did flip slightly green during this false breakout here, but then again, it flipped bearish again right over here. So, green around here, red around here, and then stayed red. Has been kind of flitting around between its slight closes in the green, but then mostly red through here. But then you'll notice that in the last couple days, we've had a pretty big breakout to the upside above 0 on the TCI. And this has only happened a few other times in Algorand's history. And most of the time when we've seen these kind of pops that far above 0, some nice upside has followed, right? Some nice moves to the upside, and especially if we go back here, some really nice moves to the upside when we see these convincing breaks to this level above 0. Now, obviously, as I was mentioning, Algorand's continued ability to keep on rallying is probably going to be a little bit dependent on broader markets. But, all else being equal, Algorand might be starting a move here. This is what we've seen in the past of moves potentially starting. And so certainly this is, in my opinion, more evidence towards the bulls than the bears. When you see the TCI engaging in this kind of behavior, this tends to be more, if you have to pick a side, you're going to pick bullish, right? Because you just look in the past. It's oftentimes been bullish when the TCI has done this. It's never really been bearish when it's popped this high up. Now again, we'll have to wait and see what happens, but certainly this is good news, I think, for those hoping to see a rally with Algorand. And the nice thing about the TCI is that we can actually probe the model and ask it, what level are you watching? What price are you looking at as being kind of the critical level between bearishness and bullishness? And right now it's looking at around 67 cents, 68 cents in that ballpark. We're trading well above that, around 20 cents above that as I record right now, maybe a little bit less than that. And so we have some wiggle room, basically, that this is the level it's watching. We've cleared through that pretty convincingly at this point. So not to say that if we continue to rally, it's just going to be only up. Obviously, you'd probably expect some pullbacks and things like that. But this certainly could be offering a nice setup, especially in conjunction with such a low UDPI reading. There's a lot of upside potential to be realized. Could this be the beginning of that trend? Time will tell, but certainly this is a good first start, in my opinion. So I also want to show the other timeframes of the UDPI before I move over to showing some on-chain data and looking at the Algorand just price chart. So the long-term UDPI is sitting down here all the way almost at -4. This is actually one of the lowest readings of the long-term UDPI across the different altcoins that we're watching. It's one of the lowest ones currently, suggesting that the model thinks that the Algorand has quite a bit of realistic upside potential relative to downside. And again, this doesn't mean that any kind of relief rally has to go realize all of this, but just the mere fact that we have so much ahead of us that even rallying up to around 0 could be a quite nice move on the Algorand price. Medium term is a little bit less bullish, but still pretty far down there. So -2.2, quite a bit of upside relative to downside potential. And then the short term is moving more towards neutral. So we had put in a nice move to the upside off of the lows that we had put in recently. And so that's where we've been realizing some of this upside, this short-term upside potential we had kind of accrued going into the middle of March, more or less. Now that we've started to realize that. And so it'll be interesting to see. But again, there's quite a bit of realistic short-term upside potential. But what could happen is, maybe we realize some of this, we have to come back down and consolidate or correct, and then come back up. And then all the while, we're just kind of slowly but surely realizing this long-term upside potential we have on top of us. So really, when I look across the TCI and the UDPI, I see the potential for a very bullish setup. Now, again, the caveat is always with these things that with altcoins, they're very much dependent on what the broader market is doing. But I think broader market willing, kind of broader market allowing, Algorand could be setting up for a nice move. Now let's talk about some other data here. So I'm just switching over here to TradingView at first just to show the price history of Algorand recently. So I'm just showing you here on the daily chart from largely just focusing in on the move going in the spring of 21, going into more recent action. And you can see that this support line here, right at around 67 cents or so, has acted as a pretty key level for Algorand throughout history. You'll see that in the August of 2020, we more or less were rejected off of this level. Then we held it as support 3 times, pretty much exactly, coming down and touching this level 3 times in the summer. We're going all the way back up, and then look at this. We bounced off of it more or less here, bounced off of it basically here, and now we're potentially starting to move our way back up. Now, who knows? Maybe we'll have to do something like the summer. We have to come down and test it again before we can move up, or maybe we'll break it if things get bearish. But I think that the setup we were seeing from the TCI and the UDPI, it would be very plausible for me to think that this was the bottom and that we're going to start seeing some moves in, at least some kind of a relief rally going up from here. But again, time will tell. Now, what I want to talk about next is some on-chain data that I think is some really useful perspective of key levels we should watch if Algorand continues to rally, right? Where could we expect the next levels of resistance to kind of come in most heavily? Now, you could do this from a purely TA perspective and just say, okay, well, if we cleared off of this range, then, maybe you'd expect kind of these levels we're at right now to offer some resistance because we've spent a lot of time here. We've kind of bounced off, held at a support a few times. You could probably then move back up to more around this level, which has acted as resistance a couple times. Here, you could draw the lines kind of however you want. I want to take an on-chain data perspective, though, and look at where people are, their cost bases are, basically. So this is intotheblock.com, and they have really useful kind of on-chain data for a number of different assets, including altcoins, where you can actually look at where people's cost bases are on a address by address account, but then also on kind of volume where the most action has actually transpired, where the most volume has changed hands. I want to look at both here. So what this is depicting here is the percentage of addresses that are in the money, which is around 5%, versus out of the money, who are in loss right now, which is about 82%, 83%, and then the percent who are around their cost basis here. And basically the way that this is working is it's just looking at the realized price of assets on chain. And the idea is that, you know, when a coin has moved, when an algo token has changed hands, someone sold it for some amount of money, and that's the realized price. But then someone bought it for that amount of money, and that became their cost basis for that algo token. And that allows you to determine the average cost basis of a given address in the algo space. And so if we just look at purely at addresses, right, this is not a very bullish setup. And that's the one thing that's a little bit concerning about this relief rally going up, is that I think kind of from a more technical perspective, or from a risk level in the TCI, there's certainly a lot of upside potential that's realistic. But from an on-chain perspective, we have to take that into context of where are people's cost bases and how might that affect people's psychology of where they might be trying to take profit. Will they just immediately take profit when price gets back to their cost basis, or will they hold on longer? A few things that we can look at to try to tease apart the answers to those questions. So this is certainly not great, right? Because the idea here is that as you hit these pockets, as you move up to these different price ranges through here, then that's just potential for resistance, right? That every time you hit someone's cost basis, they might just start feeling relief that they're getting made whole, that their initial investment is back to what it was. And maybe they just say, you know what? I don't want to risk it, right? Maybe they're feeling bearish about broader markets, the macro conditions, and they say, I'll just take my initial investment back out and I'll be happily along my way. I'm not going to try to stay in for more money on top of my cost basis. I'm just going to get out. And so that's the question that everyone's going to be asking as the price could hit that range. Everyone who has their cost basis in that range is going to be asking that question. Should I just get out now or continue to hold? And the more people who decide that they just want to get out, that sell pressure that could materialize, and there need to be enough demand coming into the algo space to be able to absorb that supply that could potentially come onto the market. Where I think things are a little bit more diagnostic or more useful to look is actually at using this volume metric here, which is really looking at the cost basis adjusted for volume. So how much of the tokens we're actually transacting here, because addresses is kind of not the best way of looking at it, because some addresses will have tiny number of algo in their wallet, whereas others will have thousands of algo in their wallet. And so this isn't as useful, in my opinion, as this volume perspective. And what we can really see is that most algo has traded hands in this general range here, between around $1.10 up to $1.64. And that's where I'm personally going to be looking for the largest amount of resistance, particularly this $1.10 to $1.30 range. So if we go back to the price chart, we can look at that as being around this level here, which is actually coincides with this kind of resistance zone that we had discussed before, right? Acting here and here. This is where I'm going to be looking personally, that if the rally can break through this level convincingly, that would be fantastic news, because that's really the hardest test. It's kind of the first major test I think a rally would have when it would get up to this price level. That's when there's going to be potentially a large group of bag holders, of algo bag holders, who might be looking to just get out at their cost basis. And then there'd be some continued resistance here, and then actually it could be smoother sailing if a huge surge in demand comes. That could just override whatever's left here at these higher ranges. Now, I'm not calling for algo to go and revisit its all-time highs. You know, we're gonna have to wait and see what happens. But once it gets above about $1.88, there's not a whole lot of cost basis up there. And so that's not going to be something acting as sell side pressure. There to be more expecting people who are so far in profit, they're trying to take profits, to be more adding to the sell pressure. It won't just be people trying to reclaim their initial investment. So I think this is a useful data point. So first thing I wanted to just talk about, where this $1.10 to around $1.47, $1.64 is going to be a key levels to watch should a rally go back up to those levels. So another thing that we can visualize also, though, that I think is interesting is looking at a historical perspective of the relative percentage of, in this case, this is, I believe, addresses that are in profit versus not in profit. So this would be comparing to this look here of the current distribution. And this is just basically showing how that broke out throughout history of Algorand's history. So what you'll notice is that kind of early on, the vast majority of people were in loss, kind of in red, and that makes sense because, you know, algo started off high. It kind of had a downtrend for a lot of this beginning. Most people will be in loss. But then there was a lot of trading of hands that happened here. A lot of people capitulated off that it bought up here and then sold. So then a lot of people actually found themselves in profit as the price trended back up. We then went back down to loss as these people probably took profits, sold the people up here. They went into loss. And then what was interesting about Algorand for a long time, ever since we went on this run in 2020 into 2021, really the percentage of wallets or of addresses in profit didn't really change that much. Even with that massive drawdown that we had here going into the summer, you'll notice that not a lot of the number of addresses that were still in profit was still largely the same. That didn't really capitulate very much. But now we're kind of in a different paradigm from that perspective. We've kind of shifted back to a place where there's a lot of people who are in loss. I think that's kind of interesting. It could just mean that there are some people who were just holding through this whole time who finally capitulated here as you know, Bitcoin came off of its all-time high, as really that fear came in. A lot of the riskier altcoins sold off. Maybe some of the older hands or the stronger hands here actually capitulated at this point. And one thing that's actually confluent with that at some point is if we look at the just number of addresses, the balance on, or excuse me, this is the number of addresses by time held is what I'm showing you here on this chart. So we have in the blue, people have been holding for a year or more. The green is people 1 to 12 months, and then traders are less than 1 month. And you'll notice that the long-term holders, you know, they just kind of held throughout this whole time here, but then they capitulated quite recently in December of 2021. They really fell off. And that's probably what led into this happening here. That these older hands that have been holding from these really low price levels capitulated at these levels, and then that brings more of the addresses into loss. But one of the things that's, I think, interesting to note here, and something that I think this could just be kind of an artifact of some weird things most likely being done by kind of larger players, is if we just look at the distribution of algo across different addresses and just look at the number of addresses that have, you know, 0 to 10, 10 to 100, etc. There's this really weird kind of action that happened with algo where the vast majority of the addresses on the network were holding between 0 and 10 algo, which is probably not legitimate, which is probably not like retail investors, because algo being so cheap, retail investors are probably going to be holding more than 10 algo in their wallet, or at least most of them. So what I actually suspect happened here was there's probably bigger players who just had, as part of their kind of algo management, or their management strategy, would just be hold a ton of different addresses with a very little amount of algo in each one. That if a few addresses got compromised, you know, if hackers were able to somehow gain access to a few to get the private keys, then it would only be a small dent into their overall worth. So it's probably just a bigger player, multiple bigger players, just spreading out their algo over a ton of different wallets rather than being something too useful. So I don't think this is all that different. And so really, from this perspective, what was holding this afloat was probably just those artificially high number of those tiny wallets, which those bigger players got out of the market here, and that brought it back down. So I think what we're really seeing right now is something more akin to where we were before the bull run in 2020, where we have a lot of people who are sitting out of profit or in loss. But if you get a big enough surge in demand, you can then go push price up, and then everyone's suddenly in profit again. I think this is really where we're looking to be more similar to, and the summer very well might have looked similar. But I just think it's something that's interesting just to look at the on-chain dynamics of Algorand. You can start to see how some of these bigger players can kind of distort these on-chain metrics if you just look at things like number of addresses because of the way they do that. That's why I think looking at things like active addresses can sometimes be a little bit deceiving, because sometimes bigger players, they'll just be splitting their tokens across a bunch of different wallets. Or if you're looking at, you know, whale addresses, quote unquote, that's also deceiving, because a lot of whales will actually engage in these kind of strategies where they have just millions possibly of addresses that they split their tokens onto. But I do just think it's just interesting to look at these dynamics over time. And, you know, I think one of the things to say is that even though this is not a good outlook to have this percentage of people in loss, we've broken through it before. So if a big surge of demand happens, it could happen. But of course, you'd rather it not be the case that so many people might just be looking for the exits. Now, the final thing I did just want to show here, and this is kind of throwing away this kind of biased view of just the number of addresses at different time frames. This is looking at just the balance of algo in different time frames. So people who are, you know, who've been holding the token for a year or more, month to 12 months, or the traders who are, here in orange. And what you'll see is that right now, the vast majority of people holding algo are these cruisers, these, as into the block defines it, these 1 to 12 months. I think this is really notable in a lot of ways, because what it might suggest is that algo hasn't really established its hodler core yet, potentially, right? All of these older tokens holding for a year or more, they've pretty much all capitulated, at least in a meaningful way. They're kind of just out of the market. Not very many people are holding algo for more than a year at this point. Most of them have already distributed from that point. And a lot of them were probably early investors, people who were just kind of take profit, potentially bigger kind of institutions who got spooked by the broader macro bearish conditions and then sold out. We don't have that core of hodlers like we have in some of the more established assets like Bitcoin, certainly, or even assets like Ethereum. And so really right now what we're looking at, though, is that it's mostly these folks here. Because again, the short-term holders, they've also capitulated. They're out, these less than a month. So the speculation's kind of out, the long-term holders are out, and so we are just kind of with these more intermediate hands. And it'll be really interesting to watch what happens to these folks over the coming months, right? Do they turn into long-term holders? Do we start seeing an uptick in this blue line as these people mature into this group? Or do we see just a constant churn where we're not really establishing a core of hodlers? Because for the long-term kind of health of algo and the price of algo, what I'd personally be looking for is for us to kind of establish a group of hodlers, a group who will believe in the project, who aren't going to be selling, maybe DCAers who are just slowly getting in. So what happens is when you get a core of people who are those hodlers, it sets the floor for price, right? That they're going to be kind of that constant demand who are always in the market, and they'll kind of set the floor for how low price can drop in bearish times, like what we've seen with Bitcoin in the past, where the hodlers ultimately will step in, scoop up Bitcoin in those really low kind of capitulation type time periods, kind of the faithful, the ones who will step in. And so that's what I'd like to see. What would be bearish, in my opinion, is if we can never really reestablish a one-year hodler kind of core group. If these just stay low and then we're just kind of constantly in the green and the orange here, that would not be very good, because that might just mean people kind of constantly coming in and out, maybe just swing trading, speculating, but not necessarily people who actually believe in algo, who are just really in there for the long haul. So something to keep an eye on going forward. But to wrap it all up, essentially what I'm seeing across the data I've shown you is that from a risk perspective and from the TCI, so kind of our machine learning models perspectives, this could be the start of a relief rally for algo that could put moves to the upside. And I would see around this zone as potentially being a target for where you first start to see strong resistance if we are able to, market permitting, rally up into those levels. Then from on-chain perspective, I'm seeing a lot of people out of the money, which is concerning. And then also, I'm going to hope for the more macro to see a more stronger core of hodlers to form. And then really with a number of active addresses in some of these indicators, I think these are kind of misleading because I think these have been a bit manipulated by whales. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. And remember, with the UDPI, we're all going to make it.